When more dollars are created without adding value to the economy, the dollars already in circulation become worth less.
I'm concerned about the erraticness of the dollar. The dollar's up, the dollar's down. We print a lot of dollars, the dollar gets devalued. That's really the concern.
Hi there, I'm Emerald Fox, and welcome back to the Lynette Zang channel. Today we're going to talk about something that affects every single one of us, the stability of our banking system and the rising threat of inflation. If you're feeling uneasy about what's happening with your money behind the scenes, you are not alone. So let's break it down and talk about what's really going on, and more importantly, what you can do to protect yourself. Let's start with the banking system. Most of us grow up believing banks are the safest place to store our money. You deposit your hard-earned dollars, and in return, you expect stability, access, and maybe even a little interest. But what if I told you the system isn't designed to keep your money safe? Instead, it's designed to use it. In 2020, the Federal Reserve made two huge changes that most people never heard about. First, the Fed eliminated reserve requirements. That means banks are no longer required to keep any percentage of your deposit in reserve. Zero. If enough customers wanted to withdraw their money tomorrow, the banks wouldn't have it on hand. Second, they relaxed Regulation D, which used to limit how many withdrawals can be made from a savings account. By removing those limits, banks gained even more freedom to treat savings like checking, freeing them to move your money at will. Now, what do they do with it? Well, they loan it out, leverage it, and invest it, often into high-risk markets. And if things go south, you are the last in line to get your money back. In a digital system where transactions can be frozen or limited with one click, that's a real vulnerability. And you might think, well, my money's still insured, right? But the FDIC insurance only covers so much, and only if the system doesn't break under pressure. In a large-scale financial event, that promise can quickly become a political talking point, not a guarantee. Now, let's talk about inflation and how it's silently eroding your wealth. Inflation is when your dollars lose purchasing power over time. Now, you used to be able to fill a grocery cart for $100. Now, that same $100 barely gets you the basics. And it's not just groceries. Rent, gas, insurance, even your morning coffee. It all adds up. And what's driving it? Massive money printing by the Federal Reserve. When more dollars are created without adding value to the economy, the dollars already in circulation become worth less. It's a hidden tax. You're working just as hard or harder, but your paycheck buys less. If inflation accelerates into hyperinflation, we're talking about rapid, destabilizing price spikes. You can't plan for the future when the value of your money changes every week. And in those environments, trust in the financial system begins to break down. So who wins in all of this? Not everyday people, not retirees, not small business owners. The ones who benefit are major corporations and financial institutions that can shift quickly, raise prices, and pass costs down the line. Meanwhile, the average American is forced to tighten their belt, dip into savings, or take on more debt just to keep up. Now let's talk about what banks do with your deposits beyond traditional lending. They engage in something called derivatives trading, a complex and speculative practice based on the future prices of things like stocks, interest rates, and commodities. These contracts can be incredibly profitable, but also incredibly risky. Think back to 2008. And a lot of what triggered the collapse came from derivatives exposure. And today, well, the market derivatives is even bigger, more entangled, and far less transparent. If those bets go sideways, it's not the bankers who take the hit, it's the depositors, you. So what can you do? You start by building a sound money strategy. At Zang Enterprises, we help people like you take control of their financial futures by diversifying outside of the banking system. That means holding real, tangible assets, not paper promises and not digits in an app. We're talking about gold and silver. Why? Because gold and silver are time-tested. They've held value through wars, depressions, currency resets, and financial collapses. They're recognized around the world. They're private, and most importantly, they're yours, not subject to the whims of banks, politicians, or algorithms. Your sound money strategy is more than just buying a few coins. It's a personalized plan to protect what you've earned, preserve your purchasing power, and prepare for whatever lies ahead, whether that's inflation, market volatility, or systemic risk. Our strategy team will help you understand how to prepare so you and your family are ready no matter what's on the horizon. If you're ready to take the first step, call us today at 833-GLD-ZANG. You can also scan the QR code on your screen or click the link in the video description to book a private consultation with one of our expert strategy specialists. If you found this content helpful or learned something new, be sure to like this video, subscribe to the channel, and share it with someone you think could benefit from this information too. Thank you for watching, and until next time, stay safe and stay smart.